Hey guys, and welcome to the Working Money channel. I got this tweet here from the Rational Root. The HODL model, Bitcoin's illiquidity supply is outpacing supply issuance. So something else we have to look at with regards to Bitcoin and where the price of Bitcoin will go. Even if you don't hold Bitcoin, guys, it's really important to pay attention to Bitcoin because Bitcoin is going to dictate where your altcoins go as well. So here's the theory. As illiquidity supply rises, so do the market impacts of Bitcoin's digital scarcity. There's an article here. The full article is linked in this description. But to go on here, the HODL model hypothesis is that Bitcoin has crossed an historic inflection point where the asset's illiquid supply is outpacing the rate of new supply issuance. Future halvings with lower supply issuance will only exacerbate this divergence. And so just taking a look at this real quick, we can see lowest illiquid supply right in and around here. And so the average per day is getting lower, as you guys can see. If it's higher, it's written in green, and if it's lower, it's written in red here. So we can see circulating supply is getting lower. And even just to go back to this first chart that I originally skipped over, you can see over here with the orange and blue bands here, illiquid supply is also getting smaller. So interesting to note that illiquid supply as a percentage of circulating supply will grow in a parabolic fashion as Bitcoin's digital scarcity drives investor behavior towards store of value as the dominant use case. As a result, illiquid supply will approach 80% of circulating supply by the year 2026. So essentially, to make it simple, the longer you hodl, the better off you are. As you can see, we will be approaching the fourth halving, and the inflection point here, they're estimating happen at the third halving. Liquid and highly liquid supply will tighten as illiquid supply grows, leaving less Bitcoin available on the market to acquire or trade. New waves of demand that enter the market to acquire this declining available supply will then lead to exponential price increases. The HODL model predicts a conservative estimate of Bitcoin's available supply following the growth curve we saw above. Since illiquid supply shares near a low at the inflection point, a logical consequence would be for Bitcoin's price to follow an inverse S-curve. The HODL price model leverages the HODL model's inflection and endpoint to create an asymmetric S-curve following the projections of illiquid supply. And again, guys, if I'm going over this too quickly, I will link this in the description of the video. Just want to finish this off. Don't want to spend too much time on this. Unlike a log curve with a continuous decreasing slope, the HODL price model has an increasing slope from the inflection point onward. With tighter liquid and highly liquid supply, we see high increases in price at the beginning of Bitcoin's lifetime, and then moderate price increases near the third halving's inflection point. As available supply tightens, though, again, we should expect higher price increases to follow. So based on supply and demand, essentially, to really kind of dumb this theory down, it's based on supply and demand. As we are seeing less supply and more demand for Bitcoin in the future, we are going to see higher prices. And so this is just one theory to suggest the longer you hodl, the more Bitcoin you have, the better off you will be. And you know, there are a lot of people in the Bitcoin space doing just that, people who have gotten into it early on who likely have a way more Bitcoin than investors who got into it within the last year or so. And these people are Bitcoin maximalists. Whether you like them or hate them, they have, I'm giving you an example, like the Max Kaisers of the world, like the Anthony Pomplianos. These guys hold a lot of Bitcoin and they are not selling into fiat. The ideology is Bitcoin is the money of the future, whether you believe it or not. That's kind of neither here nor there. The point I'm trying to make is if they hodl long enough, which they likely will, Bitcoin supply decreases, that circulating supply decreases, and so the value of Bitcoin just goes up. Right now we're trading at 39,100. Bitcoin hasn't really seen too much movement over the last month and a half. We're still in that accumulation zone. If I throw this on the hourly real quickly, you can see even Bitcoin price over the last few hours now, since about yesterday afternoon, has seen a bit of an increase. We were down at about 37,000. Now we're back up over 39,000. But even just last week, Bitcoin was back up to 45,000. This was from March the 2nd. So we are, on the hourly, we're just up and down and up and down, trading sideways on the macro time frame. Bitcoin trading sideways over the last year, as I've mentioned in the past. XRP price Still also hovering right now in about 73 cents. Low volume on trading for many of the cryptocurrencies, so not so much price movement. That could change though. I mean, there is a lot coming up, like for example, President Biden's executive order that he's about to sign this week with regards to cryptocurrency. Anyway, just want to switch gears a little bit right now. Flare Finance, for those of you guys following, is giving us an AMA and a collective effort towards greater transparency. We invite you to submit any questions you may have for our upcoming AMA. We haven't really heard too much from Flare Finance over the last several months now, so I guess maybe it is about time that we get an update. If you guys do have questions for the Flare Finance team, if you're still looking forward to getting your FLR Spark tokens, I'll leave this tweet in the description. You can click on that. Send them any questions you may have, and they may answer them in their AMA. Want to continue real quick. This from the Wrath of Kahneman. To clarify, this article is about the enterprise potential of Ripple's liquidity hub, not the XRPL. They claim crypto liquidity can help with back office reconciliation and give more capital control by aiding treasury moves like real-time money transactions. And so what he's talking about here is this recent Ripple Insights blog that was published just yesterday, enterprise applications of crypto liquidity, and a lot of interesting stuff in here. There are going to be more use cases for cryptocurrency and therefore more cases for crypto liquidity, because the crypto liquidity is essentially what is the lubricant, I suppose, for moving items of value for that utility. And so the liquidity, I know Ripple has taken the time to hit this point home whenever they get a chance. So let me just read you guys a little bit of this. Crypto for business solutions, tomorrow's use cases. The growing popularity of the technology means that more companies will begin to receive and disperse crypto over the coming months and years. Similarly, more financial institutions will explore the question of whether to hold crypto on their balance sheets or adopt crypto-enabled payments. Some brands may even begin to use new forms of digital assets, NFTs, central bank digital currencies, so on and so forth, to unlock new capital and liquidity pools. So new use cases, of course, liquidity pools are going to be important. This is why Ripple decided to come out with the XRP Liquidity Hub. That use case specifically for cross-border payments. But of course, liquidity is liquidity. And if you need XRP for something else, you can utilize that XRP to move anything of value over the XRPL. This goes on to say, however, a more deeply integrated and fundamental use of crypto in business is necessary to progress towards mainstream confidence and utility. More innovation applications for crypto could include using it to enhance transparency and facilitate back office reconciliation, something traditional fiat currencies are unable to do. Crypto can also give organizations more control and custody over capital by bolstering traditional treasury functions, such as simple, secure, real-time money transfers. So some of the key considerations here when choosing a crypto liquidity provider. To maximize these crypto use cases, companies will need an enterprise-level liquidity provider, so enter Ripple's Liquidity Hub, one that can execute real-time trades with a minimum number of re-quotes or slippage, while delivering on high-level security and regulatory standards, simplicity of integration and superiority, 24/7, 365 uptime. And so critically, the liquidity partner serving enterprise must also provide exceptional breadth of liquidity. So this, again, focusing on the enterprise grade solution. This is not just for your typical mom and pop remittance provider that may do a few $1,000s or even tens of thousands of dollars of business per day. This is for enterprise grade use cases. And so Ripple clearly, on top of that, realizing how much liquidity there needs to be in order to transfer these large payments. Multi-asset liquidity is vital because it allows for improved price and price stability, even with large volume orders, shielding businesses from high price swings due to large trades and market volatility. That point there, I think, speaks to the point that David Schwartz has also mentioned, the fact that essentially at the end of the day, XRP does need to be at that high, stable price in order to facilitate these payments without, as they say, swings due to large trades or market volatility. If XRP is at a low price and there isn't that much liquidity, we are going to see price fluctuations quite a lot. Just going to go back to Wrath of Kahneman's points here. He goes to analyze this as well. It's born from their experience with ODL, now for crypto at large. Ripple's liquidity pool lets them offer a company like PayPal an easy way to source crypto to sell themselves. This article points out some further enterprise benefits as well. Capital control, simplified transactions. I didn't go over all of it here, guys, but I will link it in the description if you are interested. Also, it can alarm XRP advocates, but remember, this isn't fiat. It's for customers who want BTC and weren't looking for XRP anyway. In the meantime, I wonder if this crypto liquidity will become another source of liquidity for ODL. XRP still the fastest, safest settlement out there. I have no doubt. I mean, XRP is just starting to get used around the world. These companies, legacy organizations are realizing that, we need to play ball. We need to jump into this. Ripple partnered with many central banks. They're already seeing the benefit. They're already starting to integrate. Ripple started off with the smaller companies for cross-border solutions. Now, clearly, they're focusing on enterprise-grade solutions. The Ripple Liquidity Hub, which was released late last year, the first step into that. And now they're putting this out, enterprise applications of crypto liquidity. So building on that, continuing to move forward. Great news there coming out of the Ripple camp. I also saw this from Michael at Val5 Links. Now, Santander, they are a Ripple partner, but they're doing something different here. Another thing that has to do with crypto utility. On the Algorand blockchain, Santander to offer loans secured by grain-based crypto tokens. Financial services company Santander said it will offer a new type of loan in Argentina backed by tokens based on agricultural commodities. In a March 7th blog, the Spanish multinational said that it was partnering with a startup called AgroToken to offer loans for the agricultural sector. The loans are backed by tokens tied to a grain like soy, wheat, or corn. They have different names like Soya, Cora, or WHEA. Each token's value is pegged to the price of each commodity in US dollars, which does make sense. The firm has already undergone a pilot project with producers in Argentina to validate the product, Santander said. AgroToken says that it has a multi-chain infrastructure with a platform built on Ethereum, Polygon, and Algorand. So they are piloting several different options there. Does sound like a very interesting solution. Another example of where we're going to see utility. Again, Santander, a bank who is partnered with Ripple, but you can see more blockchain capabilities for different use cases. In this case, piloting Ethereum, Polygon, and Algorand. Guys, this is not going to be a winner-take-all industry. Of course, we are going to see many blockchains with many different use cases. Many tokens are going to do well. Well, maybe not many. A handful will do well. 99% though of cryptocurrencies are likely going to suffer. And so this is why it's really important to know which cryptocurrencies have utility and which ones do not. Now, I saw this rumor floating around Twitter on the SEC's website. They have removed their case against Ripple, which began on December 21st, 2020 from the list of litigations. I'm guessing the case is over and the SEC has lost. They don't want bad publicity, so they've just removed all references to it having even existed. This tweeted out by New Technology Scholar, retweeting out Daniel's tweet here. Well, it's not entirely true. Okay, let's get into this. Jack the Rippler also posting this. The SEC removed the case from their website. Our time has come. Bringing up this tweet, litigation releases archive from 2020. As you know, that was the date, or the year rather, where the SEC announced the lawsuit against Ripple Labs. And you can see, with regards to the search terms here, Ripple Labs, nothing comes up. British Miss down here saying, I feel I've seen a tweet like this before approximately 10 months ago, and nothing came of it. Crypto Scott down here saying, I'm glad someone else remembers. I remember this too. Let me just go down here. Sean Michael down here saying, nope, it is still there. And so he's bringing up a screen grab here with some evidence that the SEC lawsuit is still going on. And so, yeah, I don't know why this isn't showing up. I don't know why there is no search results for Ripple Labs in this particular search form, but it does look like there is evidence. They have not wiped the SEC v. Ripple lawsuit from their website. Somebody down here, I forget who it was. It was... Dun, 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 dun. Here it is. Sparkticus replying here with an SEC page search. And if you click on this link here, it just shows that it does go to Ripple Labs and it does show actual filings. I will link this all in the description. Don't want to mislead anyone and just wanted to get this clear. No, guys, they have not wiped the lawsuit from their website. Of course, we know just the other day, Jeremy Hogan did tweet this out with this stipulation with regards to the Ripple case going on a new agreed date for the absolute end term for settlement, November 18th, 2022. So I talked about that in a video a few days ago. But there are some new developments that I did want to mention. Crypto Eddie bringing this up. Well, now this is interesting. Wikipedia is enforcing edit warning restrictions and sanctions on Ripple Payment Protocol talk page. An edit war occurs when editors who disagree about the content of a page repeatedly override each other's contributions. So clearly, the Ripple Payments Protocol page on Wikipedia was getting a lot of traction, and so Wikipedia decided to put restrictions on this page. The article, along with other pages related to blockchain and cryptocurrencies, is currently subject to discretionary sanctions authorized by the community. So the other interesting point here that I want to bring up is that it doesn't only have to do with Ripple, it has to do with other pages relating to blockchain and cryptocurrencies. And so here are some of the limitations. Limit of 1 revert in 24 hours. Editors may not revert the removal of content unless the material is fully backed by inline sources. Editors may not use industry sources, any publications which substantially cover cryptocurrency or blockchain, or primary sources unless an affirmative consensus is reached that a particular source is appropriate for use in accordance with all relevant policies, etc. So they are being a lot more strict about this. It does beg the question why. Either the Bitcoin maxis or the big banks, is coming from Benjamin S. They can try to rewrite history all they want, but this is a zero-sum game. Chorus X down here just mentioning XRP must be a currency if it's called a payment protocol. You can't buy anything with a security. Crispy Crypto Tripper down here saying deep state. A deep state is a type of governments made up of potentially secret and unauthorized networks of power operating independently of a state's political leadership in pursuit of their own agenda and goals. Great definition there. So is there something bigger going on? Is this an indication that we're seeing more crypto developments because we are seeing these cryptocurrency Wikipedia pages of all things being altered and edited frequently, so much so that Wikipedia themselves have had to put sanctions not just on the Ripple payment protocol page, but also on other blockchain and cryptocurrency related pages. Like I said before, President Joe Biden, and here's just the highlight here on Twitter, President Biden to sign crypto executive order this week as industry faces sanctions pressure. This is happening, guys, in real time. And so perhaps maybe this is having an effect on the industry. Wikipedia, just one example of how we're seeing this change very, very quickly. So another thing I wanted to bring up, turns out even staff at the SEC aren't confident they will win the case against Ripple. So to this point, are we going to see a shift? Are we going to see a move sooner rather than later? This brought to us by XRP Crypto Wolf. And so this relates to Hester Peirce. The Ripple versus SEC could have unexpected results, according to a report from Fox journalist Eleanor Terrett. The legal battle started almost 2 years ago in December, as we know. Terrett apparently tweeted something out, and she quoted Hester Peirce. The report quotes a source close to the SEC, which claims Commissioner Hester Peirce, who is known as Crypto Mom, has raised concerns about the case. Known for her pro-crypto stance, Peirce believes the regulator will not get the outcome they are looking for. So Peirce, being critical of her own organization, the Security and Exchange Commission, she even thinks her own personal opinion, she even thinks that they will not get the outcome they're looking for. Peirce has also publicly expressed concern over the SEC's action towards actors in the cryptocurrency industry. Bitcoinist reported this back in October. Peirce replied to SEC Chair Gary Gensler's comments on the crypto industry. The head of the SEC compared crypto to the Wild West. Peirce responded by painting a different picture of this time in U.S. history, one where innovation and pushing boundaries were welcome at a time, the commissioner said, the Western frontier was a place for the adventurous and rough around the edges, the idealists, the free thinkers, and the restless. Because crypto is built on code, the code itself serves as governor of conduct, but crypto is built on people too, and these people who hold each other accountable not only through unbridled public discourse, but through using or not using a protocol. This to me just means that this is more complicated than, the typical regulators are making it out to sound. Hester Peirce, I think, really does nail it here. This is not a one-size-fits-all. This is not paint us all with one brush. This is very nuanced. And, whether you think it is Wild West or not, that might be too basic for the year 2022, maybe in 2017 and before that. But now we're reaching a critical point of change. Not only are we seeing it with investors' confidence, new products coming out for Ripple, like now they're focusing on enterprise-grade crypto liquidity. We're also seeing it in small ways as well. For example, the Wikipedia page sanctions being shut down, minimized because so much is going on, so much development is occurring, not just for RippleNet, but also for blockchain and cryptocurrency subjects on Wikipedia. And like I mentioned, the Biden executive order, the long-awaited Biden executive order on cryptocurrencies outlining the new admin's view on digital assets and directing future study of economic, regulatory, and national security issues is finally expected to be signed by the president this week. So today, March 8th, we are expected to get a signing this week. Story on our scoop that President Biden will sign an executive order outlining his administration's views on crypto and directing further study across the executive branch. There have been lots of fits and starts on the crypto EO, but this week's timeline is real. CNBC's Kayla Tausch is also confirming our reporting. So, how is this executive order going to affect crypto in the United States? Are we going to see a meaningful change from the SEC with regards to their stance on cryptocurrency? And will this ultimately come out of a loss from the Ripple SEC lawsuit that Hester Peirce doesn't think the SEC really has a good footing on? I mean, once we get the clarity, guys, I think we're going to see a spike despite how the economy is reacting based on socio-political events. And remember, the best cryptos to hold at this moment in time are the cryptocurrencies that have utility, especially those WEF coins if you really want to be safe. Something to think about, of course, not financial advice. It's only my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.